Welcome back to the show. Let's talk to Craig Erlam, Senior Market Analyst for Oanda. Morning to you, Craig.
Good morning.
Right, currency special. Let's talk about the Aussie versus the US dollar. Thank you for sending some charts. Look quite complicated to a non-technician. What are your thoughts here?
To be honest, I just think it's we're just at an interesting level. So that 80 has proved quite tough to overcome before. We've had three tests of it now. Each time we've had that little pullback. So it's just a question now of, are we going to finally see that overcome, or is this going to be another case where we're going to see it pull back? And that leaves us in a very interesting scenario, because if we go above, then it looks like we could be headed towards those kind of 81.50 levels. But if we come back below, back towards those kind of 78.50s, which is very plausible, if we do see another correction off the back of that 80 level, then we've got this interesting double top pattern shaping up, which comes after a nice long run since May. So it seems like we're finally going to get some. I think we're going to hopefully see the end of this consolidation phase, whether that be over the next week or over the next month or so. Hopefully it should be cleared up quite soon.
So is Aussie still a commodity play, with, and obviously gold hitting an 11-month high, copper 3-year highs? Okay, if you think commodities are going higher, is this the best bet?
I think it is a good bet. The problem is the US dollar is playing such a role in all of this as well. The weak dollar is certainly playing a big part, as we'll see in the other charts which we come to. I think the currency players definitely having a role as well. The fact that the central bank is kind of taking this step back does make the commodity moves all the more important as well.
Understood. Let's move on to the euro dollar. We've got this big sort of area of 120. What are your thoughts here?
Interestingly, with 120, it just seems to be this fear level for the ECB. I thought it was very interesting, the coincidental timing on Friday of this ECB source, who claimed that tapering may not begin till, or may not even be discussed until December. Now, that came 2 minutes after a weak jobs report that saw euro dollar hurling itself towards 120. It got as far as 119.75, and then 1 minute later, this ECB source made these comments, and the next thing it's come back towards 119. They just seem to be this big fear in the ECB about this 120. So I'm wondering, is this going to be an off-the-record kind of Swiss National Bank scenario? Right. Interestingly, also around 120, whereby every time it reaches this level, we start to see some form of intervention, not necessarily via the markets, but via verbal intervention. And now we've seen a bit of weaker dollar, but it seems there's a little bit of fear around 120 in the market. So clearly it's working. We had that initial boost above there a couple of weeks ago. That got retraced quite quickly. Then we saw it go towards there on Friday, and that got retraced quite quickly. It'll be interesting to see if the market approaches that level on a third time. Are we going to see this market player where we see the markets really testing the central bank and pushing and pushing and pushing? Or are we going to see traders anticipating what the ECB are going to do, in which case we could be looking at correction territory, especially with the ECB tomorrow?
I was going to say the ECB meet tomorrow, don't they? Okay, well, let's wrap up this segment with a favourite of mine, dollar yen. I don't know why it's a favourite, but I always think this is a trader's currency. What are your thoughts on this?
Well, I mean, we've talked about this pair before, and it's just back up around those 108, 108.50. So again, it's not a case of there's a clear directional bias. There is possibly a slight one, but we're back around this 108. So you know there's going to be some action soon. Either we are going to see a rotation higher, you'd think, off of these lows. We've tested these lows so many times now since April. You're looking at half a dozen times since April, and each time we've rotated higher. Interestingly, though, every time we've rotated high, we seem to have made a new lower high. So that suggests that while there isn't a major directional bias, that would suggest there is some. So I'm not saying that we're going to see a break of 108, for example, soon, but it would suggest that the bears are slightly out strengthening the bulls at the moment. So it wouldn't surprise me if we saw a break of 108, for example. So if we see a new low, then that could be a very bearish signal. Equally, it just shows that it just suggests that we're going to see something, because each time we hit this 108s, 108.50s, something does happen. Previously, it's been a rotation higher. There's no reason why we couldn't see a break low, which would be very interesting indeed.
It's an absolute key chart point.
Absolutely.
Finally, what's the best chart in terms of the currencies at the moment for you?
I'm quite liking, I'd say maybe euro dollar is still looking quite interesting. There's a number of them though. New Zealand dollar is looking very interesting right now, which I didn't bring a chart in today for. All the commodity currencies are actually at a point. Your dollar CAD's just made a new low, so that's definitely a chart of interest. Anything with the pound in is also good as well. Like I said, I've chosen 3 charts today, but you could have given me any 3 charts and there'd have been something to talk about.
Okay, sounds like foreign exchange is the way forward, Craig. As always, thank you very much for your time.